Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Tuesday the 8th of April in London. I'm Stephen Carroll. Coming up today, China vows to fight to the end as Trump threatens even more trade tariffs. The US president's clashing comments keep investors on edge after a historic stock market sell-off. And Ken Griffin calls Trump's latest levies a huge mistake as Apple customers in the US dash to buy iPhones ahead of tomorrow's 54% levies on Chinese imports. Let's start with a roundup of our top stories. Beijing has vowed to fight to the end after Donald Trump threatened to slap an additional 50% tariff on Chinese goods unless it withdraws its retaliation against his earlier levies. Here's what the US president told reporters yesterday.
As you know, against my statement, they put a 34% tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on.
Responding to Trump, the Chinese Commerce Ministry said the US threat to further escalate the trade war is a mistake on top of a mistake. As analysts warn, there's now a risk of the world's two largest economies decoupling. Chetan Iyer is Morgan Stanley's chief Asia economist.
The uncertainty causes a global trade slowdown. And so it's not about China's exports to the US, but if China were to be able to export to other countries by increasing market share and selling them new products and into these new geographies, it's possible when those economies are also doing well. But in an environment where there is going to be a global slowdown, their goods demand in other economies will also be suffering. So China is definitely going to have more pain to take this cycle.
Chetan Iyer's warning comes as China's central bank eased its tight grip on the yuan, weakening the currency's daily reference rate past the keenly watched 7.20 per dollar level. The growing tensions between China and the US come as shares in Asia rebounded following historic losses on Monday. Trump's push for sweeping tariffs has wiped $10 trillion off global equities in less than a week. However, the US president's decision to assign two members of his cabinet to bilateral trade talks with Japan has given markets some confidence that levies could be rolled back. Bloomberg Intelligence's chief equity strategist Gina Martin-Adams says it's hard to be sure that things have bottomed out.
I would say that it's a big risk that not only we see tensions ratcheting up with China, but also tensions between the U.S. and the rest of the world continuing to ratchet higher. Clearly, we're already seeing downward directionality in terms of estimate revisions reflecting the tariffs. Over the course of just the last several weeks, analyst expectations for first half earnings in the 2025 year have dropped from double digits to single digits. So we're already starting to see downward momentum emerge for earnings, but I do fear that it's just the beginning.
Gina Martin-Adams there as the Nikkei and Topix stock indexes in Tokyo rose by more than 5%, with futures pointing higher in Europe and in the United States. In a litany of comments about his planned duties on worldwide trading partners, President Trump said he's not looking to pause tariffs, while adding that some deals could be made. Yet the president offered little clarity about what he's seeking from trading partners in exchange for lowering levy rates, or whether he's willing to offer relief at all.
There can be permanent tariffs, and there can also be negotiations, because there are things that we need beyond tariffs.
Trump's seeming vagueness on negotiations came as Treasury Secretary Scott Bessent said that he hopes tariff rates will come down as talks get going with US trading partners.
For countries that don't retaliate, we are at a maximum tariff level, and it is my hope that through good negotiations, all we will do is see levels come down. But that's going to depend on the other countries.
US Treasury Secretary Scott Bessent speaking on Fox Business. He went on to say that almost 70 countries have reached out to the US to negotiate a trade deal. Amid the massive market moves, traders are jumping on any hint of relief from the tariffs. One social media post about a potential pause in the levies sparked a $2.5 trillion rally on the S&P 500, only for it to reverse within 15 minutes when it turned out not to be true. Bloomberg's James Woolcock has more.
It all started with this interview.
Will you do a 90-day pause? Would you consider that?
Or Bill, yeah, I think that the president is going to decide what the president's going to decide.
That line from the White House Economic Council Director Kevin Hassett sparked speculation on social media that a tariff pause was being considered. One post was picked up by CNBC and Reuters, sparking a rally on the S&P 500 that added trillions of dollars to stocks within minutes. That was until the White House shut down the rumours and the gains were wiped out. It's a cautionary tale showing how volatile markets are right now, but also how desperate some traders are for good news. In London, James Woolcock, Bloomberg Radio.
Billionaire Ken Griffin has called the president's latest tariffs a huge policy mistake, citing increased costs for the middle class. Speaking at the University of Miami yesterday, the Citadel founder added his voice to the growing roster of prominent finance executives criticising the levies. His criticism came as Federal Reserve Bank of Chicago President Austin Goolsbee discussed concerns amongst business leaders facing supply disruption and inflationary pressure during an interview with CNN.
The anxiety is, if these tariffs are as big as what are threatened on the U.S. side, and if there's massive retaliation, and then if there's counter-retaliation again, it might send us back to the kind of conditions that we saw in 21 and 22 when inflation's raging out of control, that it could send us back to the supply disruptions of the form that we saw in 2020, beginning of COVID.
Fed's Austin Goolsbee speaking there after Fed Chair Jerome Powell last week signalled that he and his colleagues wouldn't rush to react to the tariff news. Inflation soared to a 4-decade high in 2022 and the Fed raised borrowing costs sharply to combat the price pressures. European Union trade ministers are ready to deploy countermeasures against US tariffs if needed. Speaking after discussions between member states in Luxembourg yesterday, EU Trade Commissioner Maroš Šefčovič says other means of resolution would be pursued first.
While the EU remains open to and strongly prefers negotiations, we will not wait endlessly.
EU Trade Commissioner Maroš Šefčovič adding that so far efforts to engage with Washington have not yielded a mutually acceptable solution. Meanwhile, the EU has dropped a planned 50% retaliatory tariff on American whiskey, instead proposing 25% levies on a selection of US goods. The move is in retaliation for President Trump's levies on steel and aluminium imports, which came into force last month. The Trump administration's threat of new tariffs has caused a surge in Apple Store customers who are panic buying iPhones due to concerns about price increases. Apple's US retail stores saw higher sales over the past weekend than in prior week. Apple's US retail stores saw higher sales over the past weekend than in prior years in some major markets, with employees describing the atmosphere as similar to the busy holiday season. The rush is expected to continue over the next few days, which could help to bolster Apple's third quarter results, although the impact of tariffs won't likely be felt until the following quarter. Those are your top stories. On the markets, we are seeing a rebound in Asian equities today. The Nikkei up 5.2%, the Topix 5.5% higher, the MSCI China index up by 1.7%. We did see the equity rout turn into a bond rout yesterday, though. Treasuries fell, the yield on the 10-year rising around 20 basis points. Today it's slightly below that level, down 4 basis points at 4.14% as well. Investors liquidating their profitable trades to cover equity losses. Same applying to gold, by the way, which fell by 2% yesterday. Today it's up slightly on the day, just brushing $3,000 a troy ounce as well. Looking ahead to the European session, Euro Stoxx 50 futures 1.9% higher on Wall Street. S&P E-minis just up over 1%. Well, in a moment, we'll bring you more on the change in direction in markets. Plus, is there room for countries to negotiate with Donald Trump? But while we're trying to make sense of all the headlines on the market reaction to the tariff story, it might comfort you to know that some people are having fun with all of this. Jessica Carl, who writes Bloomberg Opinion's daily newsletter, nails it again in her latest, noting the rise of tariffed as Gen Z or Gen Z slang. Apparently it's a response to when someone makes a sarcastic or cutting remark to say, "I'm tariffing you." Jessica writes, this feels like a return to previous trends like calling anything a recession indicator, and kind of makes me sort of nostalgic for some of the sort of jokes of great value in a recession that we used to hear in Ireland at the time of the Eurozone crisis as well. Perhaps there's a chart of recession-related slang we could be looking for as well. Donald Trump appears to be trying to get in on the change in lexicon. His use of panicking in a recent social media post, which he says is a new party based on weak and stupid people, but is it a combination of panic and Republican? Is it pangolin and pelican? Is it the new Kofifi? Plenty more to read from Jessica Carl in the Bloomberg Opinion newsletter, which you can sign up for on Bloomberg.com as well. She suggests that perhaps we should leave the new terms to Gen Z rather than try to come up with our own. Let's go to the markets now. Asian equities rebounding from yesterday's dramatic sell-off, even as China has vowed to fight to the end in response to Donald Trump's latest tariff threats. Our Markets Live strategist, Mary Nicola, is with us for more. Mary, good morning. Let's talk about what we're seeing today then. The turnaround in sentiment. Where is it coming from, particularly when we think about Japanese markets?
Yeah, I think for Japan specifically, it's more about Japan seemingly getting a priority in trade negotiations, which we heard from U.S. Treasury Secretary Scott Bessent, which has given the markets a substantial boost. But I would caution in terms of it's too early to say that the tide has really shifted in sentiment, because it does remain fragile without tariff relief. We saw how markets whipsawed in the New York time zone on headlines that there may be a delay in the tariffs. So I think for now, this bounce might be just a little bit more of a reprieve than anything else.
Okay, well, how seriously then are investors taking this threat of escalation from China?
I think pretty seriously. I think we've seen a bounce in China and Chinese equities, though that bounce remains a bit fragile, and it might be actually provide a selling opportunity, especially as tensions escalate. We've heard really strong words from both sides over the last 24 hours, and Beijing has signaled its willingness to fight, and so it doesn't look like it's going to back down. That just signals a potentially prolonged trade war, which obviously raises the risks on global growth.
So should we then be braced for more volatility? You mentioned that story yesterday that circulated around a potential pause in tariffs, which turned out not to be true. But give us an example of how jittery things are on markets.
Yeah, I think essentially the one thing that is almost guaranteed in this market is volatility. We've seen massive whipsaws over the last over the last week, and I think that's likely to continue because we don't have anything resolute in terms of what we're getting on tariff relief, and that's going to continue to weigh on markets, especially when we're getting more convincing evidence or concern that there could be and rising concerns about a global recession. So in addition to that is that we're not seeing any fiscal or monetary policy come to the rescue, which also aggravates and exacerbates the sell-off. So that means the risks are rising, and essentially we're going to see much more volatility in the coming weeks.
Okay, we are warned. Mary, thank you very much for joining us. Mary Nicola, our Markets Live strategist. Well, the next phase of Donald Trump's tariffs come into force tomorrow. Higher rates applied to countries including members of the EU. Speaking on Monday, the US president didn't offer much clarity about what he wants from trading partners in any negotiations. Our EMEA news director, Rosalind Matheson, is with us now for more. Ros, what did we learn from Donald Trump on Monday?
Well, as you say, after a pretty wild day on markets, we didn't get a lot of clarity either from the US president about what he's intending here, although there were two things he did seem to make clear. He doesn't want to put a blanket pause on the higher tariffs that are set to take effect on Wednesday. He also wouldn't be drawn on whether he would agree to lower any tariffs below his baseline rate, which is 10%. But he did say he's willing to talk to people. It's just unclear exactly what he wants in any of those conversations, because not only is he talking about what he calls pure tariff barriers, but he also talks a lot about non-tariff barriers. And in the world of Donald Trump, that can mean a lot of different things. And so for countries to work out what is it that they need to do here to perhaps, encourage a lower tariff rate in the suite of options for them, it's very unclear what they need to do. Like, what exactly does he want them to give him in return? And so they're kind of floundering around a little bit. We know also, given there's just so many leaders and officials and companies and lobby groups trying to get the attention of the Trump administration, either Donald Trump himself or those in his inner circle, those they see as decision makers, that it's very hard to reach anybody. We know from our own reporting they're getting inundated with that. And so, not only we're not getting public clarity from Donald Trump and his administration, but behind the scenes, it seems that, companies and countries alike are struggling to work it out.
Yeah, indeed. We're seeing differing approaches being taken by countries in different parts of the world. We did have an EU meeting yesterday of trade ministers in Luxembourg. They said they're ready to deploy countermeasures, including the potential for digital taxes in response to blanket tariffs. But they too are still leaving room open for talks.
Well, that's right. It seems everybody, perhaps aside from China, is leaving room open for talks. As you say, the EU is proposing 25% tariffs on an array of US goods that seem to omit American whiskey or bourbon, which is actually a targeted move because bourbon's a key thing for a number of US states where there are quite senior Republican senators. And so they've dropped the plan to put a 50% retaliatory tariff on that. But they do have a list of other items, including motorcycles, boats. I mean, a lot of the stuff is what has already been in the crosshairs before, but also tobacco, poultry, even playing cards. Most of them would get a 25% tariff under this. Some would get 10%. But it seems to be a bit of a calibrated response from the EU, as you say, to allow room for negotiation. And no official talk at now, the EU level, it seems, about the possibility of doing things like putting an EU-wide digital tax on US big tech.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.